and staying put throughout the sessions as our panel members discuss some great insights. Our distinguished panel members will try to address the following issues in the last session. While making large strides toward achieving the Swachh Bharat mission mandate, and as the October 2nd, 2019 draws closer, alternative financial models will need to be explored to accelerate current progress and address newly arising sanitation demands in rural India. As Swachh Bharat mission's focus shifts from ODF to post-ODF sustainability and funding tapers off, safe household-based sanitation interventions will be one of the primary bottlenecks to sustain toilet use and ODF coverage, especially among the poor. This session will be curated by water.org by Ms. Vedika Bhandarkar. She brings more than 25 years of experience in building teams and businesses within Indian and international financial institutions. Vedika serves as water.org's senior leadership in India. Thank you, Vedika. The next person who we have in line is Ms. Cheryl Hicks. She is the inaugural Executive Director of Toilet Board Coalition. Cheryl is an experienced business, investment and sustainable development professional. Next, from Grameen Capital, we have Mr. Royston, who's joined Grameen Capital in 2007. He currently oversees all aspects of operations in India. In his earlier assignment, as a senior vice president with HSBC, Royston was instrumental in setting up and heading HSBC's microfinance and priority sector business. Our next distinguished member who is on his way is Mr. Dev Verma. He's here? Oh, I'm sorry. Thank you, Mr. Dev Verma. He's the COO of the Satin Credit Care Network Limited. He has 21 years of experience across various industries. He has worked with the likes of National Panasonic India, City Financial Consumer Finance, and Max Life Insurance. The next person joining our discussion is Mr. Xavier. He's a senior wash specialist and team leader with World Bank. He has almost 2 decades of extensive experience working in developing countries across the world. Over to you, Ms. Vedika Bhandarkar, for moderating the session. Thank you, audience. This is the last session. Yeah.
Thank you. So I remember Neeraj talking about how the session after lunch is the toughest one. I think this session, which is the only thing waiting between you and your homes, is the even tougher one. So we're going to try and keep it as lively and as entertaining, and would love quick fire questions if you want. So I've been attending this. First of all, thank you very much to the India Sanitation Coalition, and we've been proud members and active members. And I've been attending this conclave for, this is the 3rd year since the beginning. And I think one change which I saw today, from the morning, in every conversation, whether it was by the government or any panel actually, financing came up. So, yay. We should all feel very good about it. But it also came up because the financing gap continues to be pretty substantial, right? Achieving ODF is great, but it's just one step. And the journey doesn't end here. It's all about sustainability. It's about treatment. It's about maintenance. And all of this requires financing at every level, right? And I'm a very optimistic person by nature. So let me first start with the good news. So even if we look at households, right, and household financing, the good news, and you've seen the winners today, we have Dave here who'll talk a little bit about the exciting work which they've been doing. A lot of financing has been done by institutions, and it continues to be done every day. And these are microfinance institutions, these are credit-linked self-help groups, whether they are government-owned, whether they are non-government, as well as banks. And more than 21 lakh loans have been given, and more than 3,000 crores of financing has got done just at the household level. If you look at the last 12 months, 1,000 crores of financing has got done. So that's the good news. The requirement is much larger, and we can talk about it, just at the household level. On the enterprise side, again, I'm trying very hard to be optimistic. But the good news is that at least lenders are looking at the financing models, whether it's a sanitation supply chain enterprise, whether it's a community drinking water enterprise, whether it's an FSM operator. At least there's some sensitivity there's openness from the lenders to look at it. But I think the journey on the enterprise side is much longer, and a lot more needs to be done. The good news also is that the government and the regulatory environment has never been so positive as it is right now. Mr. Iyer talked about the great push from both Ministry of Drinking Water and Sanitation and the Ministry of Finance for a sublimit with the RBI on water and sanitation. I hope that comes soon. Otherwise, also, we know that there is a move for an interest subvention, and a pretty significant interest subvention, which is going to be announced hopefully soon after the elections. And that is going to be for any lender which makes loans either to a household or to an enterprise. So, the good news is there. Yes, there's a lot to be covered, but at least we should start off on a much more positive manner. I'm delighted to have the panelists here with me, and they bring a wide variety of experiences and backgrounds. And let me start by asking Dave this question, and keeping with the good news start, right? So Dave, first of all, congratulations. I think Satin's huge achievement of disbursing more than 1 lakh wash loans, and that too, I think, just over a year, and that too in the state of Bihar.
That's true.
Which I think deserves a huge applause, ladies and gentlemen.
Thank you.
So would you like to take us through the journey, and what are the learnings, what are the realizations, and what contributed to this success?
So let me start by talking about Satin, what we do. We are a microfinance organization. We have a pan-India presence across 23 states. We have a client base of almost 35 lakh, and they're all women. We operate in about 80,000 villages pan-India, and we're still growing. So that is where the entire foundation is, where we have a good distribution in the rural pocket. So we started in 2016, and that's where water.org came in, and we said, let's do a pilot. We had a huge client base. We were in the rural sector, and when we started doing the pilot, we started with Bihar, given a good distribution network that we have, given the kind of requirement in terms of sanitation. So in the first year, it was not too great. I think even we could not understand the dynamics. So we did about 2,000 odd loans. But then we had the knowledge partner with water.org, and we started building on there. We saw a lot of demand. We saw some success stories. We built on it, and the next year we did about 26,000 loans. The confidence grew, the seriousness grew. Even someone like me at my level, we were also evaluating what more can we do. And then last year is when the actual numbers came in, where we did about 70,000 odd loans. There was always a demand. We decided that to make a product for sanitation and water. And we also realized that the villagers were willing to invest in that kind of money. The only constraint was the money needed to build that toilet was probably equivalent to 1 month's household income. So for them to take out that kind of money to build toilet was a big challenge. So that's where we stepped in to provide financing solutions. And of course, whatever financing we do, this is all collateral free. This is all doorstep banking. So that's where we started the journey, and it's been highly successful. The acceptability is good, and at least it's spread over a year, so there is no drain out on their livelihood and source of income. So that's where the kind of journey started, and we continue to grow. There are a lot of other factors. There was a lot of things around the process, the hygienes. We needed to ensure that the money that we gave them was used for the right purpose. In terms. So we did our verification checks. Water.org did the individual audits to ensure that there was a lot of, we had to create some excitement. We had to keep it separate from the regular product. So there was a lot of training around it. There was a lot of publicity around it. Even the government, fortunately in the rural sector is doing a lot of publicity around Swachh Bharat, sanitation. So that is how the entire journey started. And I'll just give you a couple of examples. How it's really created an impact. There is this 16-year-old girl who was bitten by a snake when she was defecating in the open. And the very next day, the entire village came to a branch saying that, we want a loan. Then there is another story where to get the guy married, they built a toilet because the girl refused to, step into, that village. So there are stories like that which very clearly show that, there is a increasing requirement, there is a demand, and there is also a social status around it. There is a feel-good factor, and of course, needless to say that there are a lot of medical benefits, hygiene benefits that go around with it. So I think it's been a great learning for us too, and we continue the journey there.
Thank you, Dev. If I could shift from households to enterprises. And Cheryl, I know the TBC's accelerator program has been incubating entrepreneurs in the sanitation economy. It would be very interesting to hear, again, what has worked and what are some of the challenges, especially as these entrepreneurs think of growth capital.
Sure. Sure. Well, I think start with the good news. So the good news is the pipeline is growing. I think the awareness that is being built around the opportunities of the sanitation economy, the sheer demand, those $62 billion numbers are really starting to attract more talent, which is really exciting. And across the three economies of toilet economy, circular sanitation economy, and the smart sanitation economy. So we're seeing it all grow, which is good. The other good news is that the companies that we work with in the accelerator program, and our program is a corporate accelerator, and so it was really founded on the principles that large companies were selecting the small companies for specific partnerships, and that would help them to get to scale as customers of large businesses, engaging in joint ventures with large businesses, that this would help us go from 0 to 100 faster. And that is happening. So more good news. We find that on average, every business that has come through our program has at least doubled their revenues. And often there's some quick win efficiencies that can be gained on the supply chain side, on the marketing side. But mostly it's a focus on a particular area of growth, again, where that partnership can be executed, which is helping with that. A couple of examples here in India. There's a company called Tiger Toilets in Pune, which is a tiger worm biodigester who, through our program, partnered with Lixil Corporation, who won one of the awards today, their Sato Pan. And we see this as a nice perfect match of toilet innovation and circular economy waste management innovation coming together. And I like to call it the bento box, because it's the Japanese company of putting the toilet and the biodigester in one nice box for the customer. So that's a fantastic success story for growth. And so what the small company benefits from there is joint manufacturing, of course, and economies of scale. Another one is Garv Toilets here in Delhi, and Garv Toilets are a smart sanitation solution. They have self-cleaning toilets with sensors, a lot of health benefits that they can claim there. And out of our program, they're partnering with Hindustan Unilever around new developments linked to the Suveda Center, which we heard from Hindustan Unilever earlier. So that's two, and then a bit of a mega project, or what it's turned into, again in Pune. Another one of the winners here today, Saraplast's T-Bus Toilets for Her, a really unique toilets for women solution, which has had the benefit of working with 3 of our member companies, Hindustan Unilever, Kimberly-Clark, and Firmenich, around this new concept of toilets designed by women for women. And so what they're finding there is that the additional services are really proving the model and making it profitable beyond pay-per-use. So the cafe and the sale of feminine hygiene products are what is making that model work, which is quite exciting.
That is exciting. And by the way, we are partnering with 2 of these companies.
Yes.
So, yes. If I could turn back to households a little bit and address the next question to you, Xavier. So a lot of the SBM's success, or World Bank has also had a huge role in the success of SBM. So congratulations for that. Would be very interested in your views on what happens after 2nd October 2009 and what is needed in terms of the journey, both in the medium and over the long term.
Thank you very much. It's great to be here, and thanks for asking this question. First of all, I mean, I think Swachh Bharat mission, as everybody knows, is the world's largest push for rural sanitation. And we're indeed very proud to support it, but we have to give the credit to the people who implement it. It's not us. We're supporting the government's program, the state's program, the district's programs, and of course the villages and the households' support to it, right? What's clear coming out of the National Annual Rural Sanitation Surveys, which is indeed the independent verification agent for the bank loan, is that there is a fundamental change happening. That's undeniable, right? And it's a change for the good. So that's also good news. There is a change, and people are building toilets. People are also using toilets. If we believe the figures, are quite impressive, actually, with more than 90% of people who have access to a toilet using it regularly or always. So that's good. Now the key question is indeed, I mean, as I always say, toilet is a beginning, not an end. So, and then what, right? The mission is ending in about 6 months. The key question is indeed what happens next. Are people going to, basically the key question is, now that the government and the people of India made this campaign a real government and national movement, but also a people's movement, will it sustain the campaign closing date? Will it sustain the sunset clause? And that will take basically a few enabling things, which is that the people really need to own it enough to want to continue it without the campaign pushing for it, right? That's also, of course, at the household level, but also at the village leadership and at the government's levels, be it at the state or national levels, right? That's what the bank is supporting the Ministry of Drinking Water and Sanitation and all the implementation machinery to really engrave into the DNA at all levels that rural sanitation is important, that it has proven, because of its success, that there is a clear demand, a clear appetite for it, right? For various reasons, but there is a clear appetite for it. Now the question is, what will it take? What will it take? And that's where it's difficult. We're trying to engrave really, one of the things is the consistency of involvement, right? There is very strong leadership at all levels now for it. Will it sustain? That's one of the key aspects, right? But I think that if the ownership is really there at all levels, that should not be the only factor. So the sustainability has to start with the households. I mean, the examples that you gave are exactly that, right? If people are convinced, right, and especially if they are convinced to build, they will build something that suits their needs. They'll build something that they'll own, that will be theirs, right? And of course, the probability that they will sustain it, maintain it, and eventually upgrade it and beautify it is much greater. There is also a lot of effort that have been done to try to create that ownership in places where third parties build the toilets, and then the question was convinced to use, right? That is where the question mark is, and that's where a lot of activities are going on. The bank is supporting in different ways. Everybody knows the 1.5 billion loan, which is also the largest ever loan the bank has done for the sanitation and maybe water and sanitation combined worldwide. So we are focusing. The reason why we put so much money on it is because the government put the emphasis on the long-term objectives. it's achieving, it's sustaining, it's developing the solid and liquid waste management so that the villages can have a clean environment and really get convinced that with this clear environment and the benefits it has on the community, this is something to carry on. Practically, what we're doing is working with the ministry to engrave in the institution, in the delivery machinery, that rural sanitation needs to continue. With or without government funding, that's something that's to be determined, right? But we are supporting as well through technical assistance, which is direct support in various ways, through guidelines, through consulting, through mobile apps and commercials. You must have, I hope, seen that Awazaban Part 2 campaign with Amitabh Bachchan, which is running now. This is something that we contributed to develop in partnership with the ministry. And there is also this massive training that we're launching to raise awareness, if it were necessary, or really engrave the knowledge of rural sanitation to about 250,000 district officials and sarpanches, who are going to be the ones who will continue carrying the mission after the campaign is over. So we hope with that the campaign will be sustained in the medium and in the long term. There is clearly a role that the private sector and the banks have to play, and that's why we're here today, right? That role, I suppose, has been discussed, but we'll discuss this a bit further, is nascent, right? It's the beginning of it. We have hardly seen a massive movement on the private sector driving the sanitation towards sustainability. That's where I think there's a great potential to really use not only the rural development that comes with it, but the private sector and the banks to work together in the right partnerships to push the agenda and continue to push the agenda forward. Thank you.
Thank you. Royston, best for the last, right? So I wanted to, because I'm switching between households and enterprises, so let's again switch to enterprises. And would you like to tell us a little bit about Grameen's philosophy and the double bottom line agenda as it relates to social enterprises, and specifically how do you relate it to WASH in India?
Sure. Thanks, Vedika. I'm glad you said save the best for last. I was trying to think what's the term for the last speaker on the last panel, and the loser came to mind. So if you said save the best for last, maybe I'll live with that for now. But I want to jump straight into what, the question I think that was raised earlier this morning on franchises, and pick that thread up, and I think Rashid raised that in the morning. I remember in the days when we were starting Grameen and people were starting small enterprises, there were the 3 Fs you went to for money. They were family and friends and fools, and not necessarily in that order. But we sort of took that role of fools, because fools rush in where angels fear to tread. And we said, how do we bring capital to really serve the bottom of the pyramid? And listening right through the day, and I've been in and out, but it seems to be, people seem to be disbelieving of the fact that you can take a model that's being run by philanthropy and on CSR and move it through mainstream sustainability. And I'm a bit aghast, but of course I wear colored lenses. But the fact is that we've seen exactly that in microfinance in the last 15 years. Naina, when we started lending to MFIs, they were only NGOs in 2003 and 4 and 5. And those NGOs transitioned to for-profit companies when we set up Grameen Capital to be able to help them to transition. They then became not-for-profit, they became non-bank finance companies, and today 9 out of them have become SFBs and 1 mainstream bank. So the transition is evident. And the fact that we're not saying, let's do it, and we're saying, is it possible to transition from a philanthropy base, from a CSR base, from a NGO-based world, is baffling, because we've got a model that has worked. And rather than trying to reinvent the wheel, we should be saying, listen, what do we need to do? What worked right? Let's put that in place right now, which worked for microfinance, and bring that to bear, whether it's sanitation, whether it's affordable health, whether it's affordable education and skills. There has to be the desire to say, let's move that. I remember 10 years ago when Rockefeller wanted to give us $5 million and said, use this for microfinance in India. And Grameen, being Grameen, said, no, we don't want your money. And they said, no, but we want to support. And we said, no, but we don't want you to give it to us. And then they insisted. So we said, okay, keep it with you in a bank. give us an SBLC on the back of that. We will give that to banks to be able to lend to MFIs. And as the banks get comfort, of course, if there's a loss, you draw from that. But as the banks get comfort, then make that a 2x guarantee and a 5x and a 10x, and then lend without a guarantee. And we'll give that to another small MFI for another bank. And we were able to do $150 million on the back of $5 million. So can't we together in this room put a $10 million guarantee and say, let's create a pool of guarantees which we will take all the winners in this book and bring them to a financing model, which is why 2 years ago, and my crazy dream, as I said, fools rush in, but the crazy dream is to create a capital with a conscience ecosystem, which is a social investment bank, a social debt company, a social equity fund, and a social stock exchange. The social investment bank we launched 10 years ago. 2 years ago, we launched the social debt company called Grameen Impact India, where we said, in some ways, the financial inclusion box is checked. How can we bring those learnings to affordable health, affordable education, WASH, clean energy, agri? We helped SEBI write the Social Venture Capital Fund, and we want to do the social stock exchange where we completely democratize funding access. So if a small kid who earns 300 rupees for her birthday wants to help, part of that 3 lakh cost that someone told you in the morning was the cost to run, Jindal, whatever foundation to run their toilet. That 300 rupees can be part of her putting on Facebook, 500 friends joining, and that creating a movement where a school takes over running a toilet through crowdfunding. So the ability for us to be able to start thinking the paradigm of sustainability, franchising, and really creating sustainable models, that's where people like World Bank can come in and support these models. That's where people like Saturn can come in as MFIs. And I chair the Indian Microfinance Network today. We have 30 million clients. We should not even be reinventing the wheel in some ways and just leveraging off that platform. I'll stop for now, but you wanted me to stir things up? Let's do that.
I love that energy. So Xavier, I want to come back to you. I understand World Bank recently did a study on the demand, right, for credit, both at the household level as well as at the enterprise level in 3 states, UP, Bihar, and Jharkhand. Would you like to share some of the learnings? Were there any surprises from the study?
Thank you. Yeah. So we just did recently a market assessment, both on the market and the market for the finance sector in Uttar Pradesh, Bihar, and Jharkhand, right? And what came from this, and just as of now, the 2012 baseline, which is the basis for Swachh Bharat, is pretty much met in all these 3 states, right? So the toilet construction is kind of game over, at least on the 2012 baseline, right? But just based on the growth, based on the maintenance, on the retrofitting, on the beautification, and on the value chain, right? What we established is that there is about 42,000 crores of market to be harvested, which frankly I believe is completely underestimated, right? Because that's the market we know of. We don't know the market we don't know of, right? That's one big number, I think, for 3 states, of which about 12 to 24,000 crores could be funded through finance, right? Would need some financing to run. So that's pretty big numbers. I don't know about India, but if I remember the study that you talked about in another workshop, which is about 80,000 crores, I think, nationwide, it's a big amount. So that's one aspect. And what we have done is one big surprise was that the finance sector is hardly there. There's hardly any player there, whilst the people who are there are having loans which are 100% repaid on time, right? Without collateral, which is, I understand your experience as well, right? What does it mean? It means that there is a potential market which seems to be working pretty well, right? And it's completely untapped at this point, right? So we really need to do something about it, I think. And that's what we're trying to do in partnership with water.org, is to go and have workshops, both with government officials and with the finance sector at various levels, including, of course, in these states, to kind of try to put 2 and 2 together and basically pitch the fact that there is a potential there for the development of a market, and try to hear back from the finance sector as to why they are not interested. Is it really that the sector is unknown, or kind of there's this perception that we hear that it's a risky business, lack of collateral, all that stuff? Or is there something we can do to facilitate a greater exposure in that sector? And linked to that, of course, we also want to talk to the private sector to say, well, you guys have the ideas. Let's try to see whether we can meet these ideas with financing so that it turns into a business, right? So that's what we're planning to do.
Okay, thank you. So Dave, Xavier says there is a lot of demand, right, just in these three sectors, and you work across 23 states. So how do you see this product? Do you see this product continuing even beyond Swachh Bharat? Do you see the nature of demand changing? Will this be a sustainable product line for Satin?
So before I answer that, quickly a comment on what Xavier just mentioned. It's absolutely a fact that wherever we have given loans for sanitation, we've got 100% repayments. So clearly, that indicators are there that this particular product line is doing really well. It's meeting its objective for what we are set out to. The other piece is we got some funds from Water.Equity. So I think what the other panelists were also saying, Royston also saying, I think some of the MFIs, we have the best distribution, probably the kind of villages and deep pockets that we work in. I think there cannot be a better distribution to promote sanitation in the rural sector. I think there is a subtle constraint in terms of maybe funds, because ultimately even for us we are using the same funds which we are doing for any other product. So while we are a big organization and we are very focused on the product and we continue to grow, so maybe not all can do that. So that is one. Second is, for Satin, this is going to be a constant upscale in terms of distribution, because we just launched in Bihar. We wanted to see how it goes, how's the success, how's the reaction from the clients, are the business dynamics in place. We've just in this month itself we've moved to Assam, and in the next 3 months we're moving to Orissa, Jharkhand, UP. So the plan is very clear that we are very clearly focused on this product. We will be looking to scale it up. There is demand, and again I'll give you another example. Now our clients are coming back to say that, okay, now we have a toilet, so why should we bathe in the open now? So I'll build another toilet. So that's the thing. We also give loans for water, whether it's building tanks, even to do with septic tanks, connecting to the mainstream water supplies. So I think the more and more we are getting into it, and there is good knowledge sharing when we interact with these kind of forums, the management is convinced that this is something we want to continue. And rightly said by Royston and Xavier, I think partnership, whether it's with the government or with such organizations like World Bank, I think that those partnerships are going to be critical if you really want to scale up and make full utilization of the distribution that we have.
Cheryl, if I can come back to you, from an enterprise point of view, what do you think needs to happen in the system, in the ecosystem, whether it's circular economy? I saw you disagreeing with Madhu in the earlier panel, or if it's from financial institutions. What do you think needs to change?
So I think linked to the sustainability of the system. So our coalition in creating the sanitation economy was really about providing an alternative to unaffordable sanitation systems and making really a clear line in the sand that sustainable sanitation systems that are cost recovering and revenue generating are possible. The models exist today, and they're scalable, and there's growing demand. And so, I think that is really the shift. And I think I agree with Grameen Capital that there is still skepticism and disbelief proof that that's possible because it hasn't been possible before. But I think we have many new tools. One of our companies, a big sewer maker of the past, is completely convinced now of decentralized sanitation models and cites the fact that these systems were designed in times when that's the best we had, but the best is much different now. It's much lower cost, it's much more dynamic, and it can serve many more people, and we can get it to them faster. And so we see this, across the different economies, the toilet economy, the circular economy, and the smart sanitation economy. And so I think your provocation is the right one, that we've seen this before and been able to overcome it. And I mean, ODF was also one of those areas of skepticism that we've been able to overcome. But coming back to the enterprises themselves, we shared the good news of the fact that the universe is growing and they are growing. However, financing has not caught up. But there's some reasons for that are partly linked to that system change, and part of that is around the original donor funding of most of these companies. And so I think when you look at impact investments, a donor-funded company thinks that the impact side is more important than the investment side, and rarely have financial statements, audited financial statements for the prior 3 years, which is, of course, required by all investors. And investors want to see cost recovery and revenue generation. Xavier, I think you said it in an earlier meeting that we were in together. We have to know, how is the company going to make money beyond the CapEx? And so some of these myths also have to be overcome, I think, by the companies that where previous donors were satisfied with outcomes, sanitation outcomes. Investors need more, and they need to see that revenue growth. There's also a mismatch between the capital available. This session is about innovative credit finance, and there is a lot of credit available. There's a lot of debt available. There's less equity. And again, in that system change sort of stage that we're in now, it's sort of pre-equity stage, where many of the companies, because they've been donor funded, did not put their own equity into the business, which is, of course, the requirement for debt. But innovative financing models like development impact bonds that we heard about earlier, guarantee mechanisms, there's a lot of really interesting equity notes we've heard about. Really interesting innovation coming online from some unusual suspects, actually, including private banks, that are really exciting, and these are really meant to help the businesses get over that hump of the need for equity before they can get to the debt round. Maybe the final thing I'll say about that is. We can also learn from other mechanisms like the Gavi-IFM model, where we need large-scale change fast, and some of the ideas were mentioned. And another one could be the Gavi-IFM model of putting up front sort of a corporate bond structure of parking the money and being able to use the interest and leverage it to get big things done faster. And we're exploring something similar with a couple of our companies who are ready for a scale of 1 million to serve 1 million people from about 100,000 or less. And so to get to that kind of scale, it's a waste to resource model. So we need the security of supply of the toilet resources to go into the fertilizer model, and we need that to be at a scale of security of supply from 1 million people. And so we're looking at some of these creative mechanisms that can help us to do that, and we'd be really curious to continue that discussion with the panel.
So Royston, while I absolutely agree with you that we shouldn't reinvent the wheel, and we already have some phenomenal channels which reach the last mile very effectively, but you guys have also been doing some really cool stuff on innovative financing to meet the SDGs. Would you like to comment on that?
Sure. Let me just take a segue and then come back. I'm not ducking the question. I'm just wondering, and I'm recalling a conversation with Amitabh Kant where we were saying, how do we get solar panels across all 30 million Southern member clients' households? And they said it'll take 5 years. And we said, why can't we do it in 5 months? And the reality is, again to Rashid's point, who is going to pay? Why do we need to find the traditional payer for that service? Why does the woman have to pay for the toilet? Isn't there a health benefit that can be computed and monetized, like a solar offset that can be used, a carbon offset to be able to pay for the solar panel? And therefore, what we did was we said, what is the most enabling way to bring in different pools of capital? Cheryl talked about the pull between what donors want to see and what investors want to see. How do we bring all of these into a single instrument? And that's when we came up with the SDG impact bonds. We were getting a little annoyed with, I'm being quite candid because we have a small group, but with this whole SIBs and DIBs discussion, hair splitting around, is it a SIB, is it a DIB, who's going to fund, and the obsession around who the outcome funder was driving the discussion as opposed to the outcome. And that was pretty strange. So we said, let's throw away the discussion around the nomenclature. Let's call it an SDG bond. Let's work bond by bond on a goal. I spoke at the UN General Assembly last September. I committed that within 3 months we'll have the first SDG bond out. It takes normally 3 years to do a bond. But what we did, as I said earlier, is always foolish, and time will tell whether that sort of his brilliance wrapped in foolishness or the other way around. But we said we will find the outcome funder later. We will not care about the outcome funder right now. We will put our own money. We will predetermine the outcomes. We will find the partner who will implement. As the project is being implemented, along the way we will see the outcomes being met, then bring CSR and outcome funders to look at those projects, because the proof of the pudding is always in the eating, and then decide whether I want to support this or not. And say, yes, I'm in, because I'm going to put my money only if the outcome is met. Globally, we are seeing the move from input funding to results-based funding. So why don't we create a pool? And that's what I told the UN. Create an instrument which brings in donor funding, brings in government funding, brings in corporate CSR, brings in private equity and mainstream capital, and puts them all together depending on different risk profiles. So we launched the first one for Goal 5, which is gender, doing 2,000 tribal women becoming poultry farmers in Madhya Pradesh. The second one we launched last month, which is on Goal 8, which is working with skilling companies for placing them, and that's the outcome on livelihoods and income generation. The third we want to do with you and hopefully others in this room on Goal 6 on sanitation, then one on Goal 7 on clean energy, the last one on Goal 2 on food security, and then we run out of money. Now that's the reality with what all we've raised. But my hope is in that process, we will realize that some outcomes are being met, financing is coming back, and we will get refinanced, and then make each of these 5x of the initial size. And then we'll put 10 again, but we will get other investors to come alongside us. And that's when we will create a market and probably list these on the stock exchange, and then get individuals to subscribe. And CSR can then be either a guarantee upfront or can be the outcome funder. People like the World Bank and other multilaterals can be the upfront guarantee catalysts. But people like Saturn and Grameen Impact and mainstream banks can actually start providing the investor capital. So then you have really the ecosystem that Cheryl's talking about to build that pipe.
Thank you. And I love the can-do attitude, Royston. Do we have any questions? Lakshmi tells me, okay. Go ahead.
Yeah, I have a quick question.
Yeah.
When it's a topic about innovation, especially in the sector, and we know credit is hard to get when we're talking about treatment of the full circular economy, how do each of you look at failures? And is it something that in a sector where it's anyway hard to get funds, or you're talking about performance-based loans, what is the incentive for people you're working with, entrepreneurs, to actually feel like it's okay to fail? Going back to your point, we may achieve some outcomes in SDGs, but for innovation to really succeed in any other sector, it really is a reflection of how quickly you fail and how quickly you come back. How does it work in the construct that you have here? This is to everyone there.
Sure. Who would like to go first? Would you?
Sure. It's a very good question, Krishna. I'm not really sure how to answer it. I think for the entrepreneurs in our program, there have been some failures, and I think the failures, the ones I'm thinking about were also kind of linked, I think, to that transition where a government funder or a government customer might be the business's only customer. And I think that was in the earlier stage when we've moved on from that, and now the models, may have a government customer, but they also have other service models packed around it. And so I would say as a sector we've learned. As individual entrepreneurs sort of learning and then creating other businesses, I think we're still a bit young to start to see that. I think we probably will, because these are pretty passionate and extraordinary people. But we haven't seen that yet.
I think you actually answered the question, right, which is fail fast and then share. And I think that's the most important thing. And we've seen it even from our lending partner side as well as the entrepreneur side. And yes, a lot of failures happen, but it's fail fast, adapt, change, and then share. Royston, would you like to add?
Wanted to talk about the fact that different investors have different risk appetites. And therefore, if we just let the status quo go on, then if the financial investor faces a failure in his investment, he will not come back to that sector. Now, how do we use philanthropic capital and developmental capital to insulate the investor from the failure? And therefore, in that structure, the guarantees become a good buffer. Because, for example, when I talked, and I won't name the corporate, but to the CEO of a corporation in India, he said about 60-70% of my CSR money actually has the effect. There's another 30-40% which is questionable. I don't really know whether it's having the effect that I've spent it for. Now, if we can create a pool and put that CSR money into that pool where you're paying only for success and keep a buffer for failure, then that becomes a risk capital that's ready to be absorbed if there is a fault. So the Rockefeller 5 million became that failure capital, which never got drawn down because there was no failure. But God forbid, should there be, and as rightly both of you said, fail fast, then at least that can absorb the shock, but the financial investor doesn't taste that too earlier on, and then when he builds a large portfolio, he can easily absorb that. So that's ecosystem is important.
Last question, Lakshmi.
I think
yes.
My question was quite similar. I think you have already answered it. So we have seen shifts from subsidy to microfinance in last 3 decades, specifically to be solar pumps and micro irrigation. So I had the same question: that what have been the experiences in case of solar pumps and micro irrigation, and what have we learned from there? Are we implementing in sanitation when we are going forward? I think this is the time we have to intervene if we have any.
No, you're absolutely right. In fact, I would go a step further and say the whole sector, right, just broadly water and sanitation, is probably 10 years behind the renewables sector in terms of how the financing has happened. If you look back, renewables also started with grants, then they started with soft money, then the blending, and then eventually commercial. The whole world and DFIs, etc., think that water and sanitation is only for either grants or for really cheap money. And that's changing, and there's a lot which we're learning from the renewables so that we don't have to go through 10 years and we can do this much faster. Yeah. Any other comments from the panel?
See, in the microfinance setup, at least where we are concerned, we are dealing with solar products. But it's not in the sense like pumps and irrigation, those things, because, see, you also have to understand the bandwidth is limited. Right now, for me, it is my client, my money, everything is mine. And to reach out to the clients, the product has to be very, very simple, so that the staff who is the front line can communicate easily to the clients. So you do have to work around those constraints also. But I think as and when the agriculture, like 75% of our end users are using it for agriculture and allied services. So we do see some kind of demand coming there, but not specifically very heavy duty solar products in terms of machinery and things like that. But it is, you also have to keep the ticket size in mind, given the kind of clientele, because the average ticket size in the industry is 25,000-26,000 rupees. So you have to work within that to ensure that the clients can pay it back.
much, and thank you for listening very patiently. And I do believe the panel deserves.
Do we get a closing comment or one? Okay, 30 seconds.
Go for it.
Just in terms of policy, since we're sitting in a FICCI building, if we can include impact bonds in the list of CSR activities, I think that will again unlock a lot of CSR capital to come into that piece. I just want to flag that.
Working on it. Xavier, any closing comment?
I mean, what I take away from this is, again, there's a tremendous market. It's largely untapped, and all the players exist and are already established, right? So there's nothing really to create beyond getting these partners to work together and create the links, right? A couple of things that struck me is that a financial institution, a business case or a business model, and an entrepreneur is not enough, right? There is a need as well for a technical partner to get to make the link between, that's your experience, right, between the finance and the business model, right? That's one aspect that's fundamental. The second one is that there is in this country the National Livelihood Mission, which is a tremendous vehicle for development of the finance sector, including on sanitation, right? And that is clearly something that we could tap a bit more in order to develop the outcomes. Last, it's about relationships. When it comes to a loan to an individual or a household, it's really about the relationship that is created between the lender and the borrower, right? Again, the self-help groups and the National Livelihoods Mission is a very good vehicle for that. We need to find the right models as well for the entrepreneurs and the MSMEs to be developed along the same lines. But I think that, I'm very encouraged by this discussion, and I think that there is indeed definitely in the room capacity to create some of these partnerships going forward.
Thank you. Sharon?
Yes, so we also have a policy wish list from the enterprise side. So, I think to increase that demand and get businesses to move faster and more businesses involved in this sector, we still need a framework that allows business to innovate within. So a safe, enabling framework. I think this is still scaring a lot of businesses away from the potential opportunities that whatever they pick then might get regulated against. So that's needed. Another opportunity is industrial policy. So, on the global level, there is a movement around businesses having to require access to safely managed sanitation across their operations, and that is starting to include circular economy, waste management as well, and health outcomes. And so that can be really powerful also for creating the demand. So once businesses, have to do that, and many of them were astonished to look into their full operations globally and see that, in fact, they weren't complying to that. And so the force to comply will also create the demand for the small enterprises to be service providers. So that's a big opportunity. And finally, strengthening the local financial institutions to be able to provide the equity that's needed, and a lot of creative mechanisms that we just discussed.
Yeah, thank you. And thank you for all those comments. And Xavier, I absolutely agree with you on the livelihood mission. In fact, we've been working, as you know, in Maharashtra now for over a year, and we'll soon start working in Madhya Pradesh. And we think that's a great way to scale. Thank you. And please give a big hand to this wonderful panel.
And thank you to our moderator.
Thank you.
So while this excellent panel is getting their photograph done, I want to take the opportunity of first and foremost thanking our hard-working India Sanitation Coalition team, who I'd like to stand up and take a bow for the wonderful work that you've been doing, and the conclave. So thank you, all of you. I don't know what we would be without you. So thanks. Of course, to the steering committee who've been with us through the day, the project coordinator, Mr. Kidwai, who's been founder and indeed who keeps us on the straight and narrow. Thank you. And all of you for sticking it out till the end of the day. So we've had, I think, a very productive day. Things have been recorded. There will be outcomes. There will be reports. You will see all of that. And make sure you collect your reports before you leave. So I'm now going to ask, is it Sudeshna, to come up and just let you know what's happening tomorrow, because they're very different workshops and modules, which I hope some of you will get to attend.
Thank you, ma'am. And with that, we close the first day of our conclave. A big thank you from Team ISC to each and every one of you who attended this conclave. Today we end our day with these interesting panels. Tomorrow we begin our day at 9:30 a.m. sharp. After today's insightful deliberations, we get into a completely different format tomorrow, a very exciting format though. We begin our day with a storytelling workshop for NGOs and entrepreneurs who are working in the wash space, which culminates into a Shark Tank format. So we do hope each and every one of you is there tomorrow. We look forward to seeing all of you there. Thank you. And of course, there's another thing that I missed. The lovely Shark Tank format program also ends with a brilliant insight session, a very interesting roundtable deliberation that we have about the role of youth in sanitation.